Hey everybody, welcome to the Head Startup. If you're a bit of a daredevil and Bitcoin is not risky enough for you, how does Bitcoin options sound? That's what I'm going to be looking at today. I'm going to be looking at the options trading feature on Binance. Firstly, I will go through exactly just how they work. So there's 5 key differences between traditional options and options that you can trade on Binance. And lastly, I will go through a tutorial on how to actually make a trade and hopefully make a few quid myself. But we will have to see, as this type of investment is pretty risky, so there's a good chance I will lose any money I invest in it. So stick around till the end to see me lose some money. Right, let's get straight into the video. The options on Binance are a simplified version of traditional options. So you have 5 different types of markets that are available on Binance. I'll just go through them here now. So you can trade options for Bitcoin, Ether, XRP, Chainlink, BNB, and also Litecoin I think you can do also now. When you buy a traditional option like a Tesla call option, for example, you are buying the right but not the obligation to buy a certain amount of Tesla stock by a certain date in the future at a certain price. And there will be hundreds of choices of different options at different strike prices and at different expiration dates set out into the future. But here are the 5 key differences to the options available on Binance. The first difference is that the Binance options are actually cash settled. So when you exercise your Bitcoin option, you won't be exercising your right to buy Bitcoin at a certain price. What you will actually be doing is receiving a cash amount equal to the profit on that contract. The second key difference with Binance options is they have very short-term expiration dates. You can buy options with expiration dates within 5 minutes, 10 minutes, all the way up to 24 hours. This is quite different to traditional options which may have an expiration date of 100 days in the future. It is also worth noting that the options available on Binance are American-styled options. So this means you can exercise your option at any point up until the expiration time. So if you bought an option that expires in 24 hours, you can exercise that option at any point up until the end of the 24 hours if it is in the money. The next key difference is to do with the strike price of the options. So with traditional options, you have a choice of multiple different strike prices. So let's have a look at Tesla here, for example, again. So you can see here at all of these different options, there's loads of different strike prices. Binance options only provide one strike price, and this is always at the current price. So for example, if you were buying a Bitcoin option, then the price would be equal to the BTC USDT price that is currently on the market. So when you buy one of these options, it is always just at the money. The last key difference to traditional options is that you can only be on one side of the contract. You can choose to be the option holder, but you can't actually choose to write an option yourself. So that means the person always on the other side of the contract will actually be Binance itself. The positive side of this though is that there is no liquidity issues. Before I go on and execute a trade myself, let's have a quick look at the payoff diagrams so you can visualize how you can actually make a profit with these contracts. Okay, so here I have brought up the payoff diagram for a call option. Initially, when you enter into the call option, you will see that you have paid a premium. So a premium is the cost of actually buying the option. So initially you will be at a loss because of this premium. So that is the maximum loss that you can possibly have on an options contract. You're not going to lose any more than the premium you initially have paid for the contract. So as the underlying price of Bitcoin increases on this diagram, which is moving to the right hand side, you start to make a profit once you hit this break-even price. So that is enough for the price to cover how much you have actually paid for the premium also. And once the price goes past this break-even point, the profits are actually unlimited. I say that with a caveat though, as because the expiration dates are very short term, there is only going to be so much potential upside that you're going to have in one particular day. And here also is the payoff diagram for the put option, so you can see it's the complete opposite. You're hoping for the price of Bitcoin to decrease in that situation. Right, so I think we're ready now to go onto the Binance app and actually trade one of these options and see how they actually work in practice. Right, so I have the app open here now and I'll go through it step by step on how to actually execute a trade. So the first section you need to go on the app is go down to this future section here down at the bottom, and then you will have a few different options at the top here. So you can see USDM, CoinM, and options and battle. So you want to go to the options section here at the top. So you can choose then what type of contract you want to trade in. So if you click on the BTC USDT section at the very top here, that will bring up all the different types of markets that you can trade in. And as you will notice, all of these options are priced in USDT. So that means that you will actually have to go and buy some USDT if you want to trade any of these options. So you can't just go in and buy these options with USD or with Euro. You need to actually go and buy some Tether. So once you then have a bit of Tether in your wallet, then you can go and choose what type of option you want to trade and what the expiry is going to be. So as you can see here, you have your 5 minutes, 10 minutes, 30 minutes, 1 hour, 4 hours, 8 hours, 12 hours, all the way up to a day. So just for this video, I'm going to trade a 5-minute expiration, and I just have 30 Tether, as you can see, in my wallet. So I'm just going to buy a 5-minute call option here and see what happens. I'm not going to go too scientific on it. So what I need to do here is I just have 30 USDT in my wallet here, so I'm not going to lose much if it goes. So I'm just going to buy a call option here. So I'll put in my max quantity. So that'll only allow me buy so much. So I'll just put in the full Bitcoin here, and then it'll bring up my max that I can buy. So that's 0.165 of a Bitcoin option, and now I will hit the call option, and that brings up a summary here as well, which is very handy to see. So you can see here the overall quantity, the strike price, which is at the current Bitcoin USDT price, and then the premium, that is how much I'm actually paying to enter into this. So I'm entering into it with 27 USDT, and Bitcoin needs to go up to 57,000 in the next 5 minutes for me to actually make a profit on this contract. So it's probably unlikely that I'm going to make anything from this, but let's have a go and see. So I'm going to hit confirm, and let's see what happens. So unfortunately my trade finished at a loss there. I needed the Bitcoin price to hit $56,937 in order for myself to actually break even on that trade, but it only settled at $56,781. So in that case, my option expired completely out of the money. If you want to make me feel better, you can do me a favor and like the video and subscribe to my channel. So I think the lesson from that is, if you are trading these, make sure and brush up on your technical analysis of the charts if you want to make any bank using these. But as you can see, it's very high risk and very high reward with these. It's very easy to lose 100% of your investment, but in volatile times you could easily make a significant return on your investment there also. So that's pretty much all I have for you today, guys. Thanks very much for watching. I hope you enjoyed the video, and I'll see you again soon.